Hello and welcome back to another episode of the Investor Financing Podcast Q&A sessions. We've got Bill Davis here to help with the questions. As always, you can go to investorfinancingpodcast.com/ask. Ask your questions and we will answer them on the show. So let's get started.
All right, this first one comes from Gus. He says, "Hi, Beau. What are the advantages of SBA 7A financing for a franchise startup versus conventional financing? Trying to figure out the differences. Regards."
Sure. So really, it's simple. They have a policy called credit elsewhere. So if you can get credit elsewhere, meaning you're putting down a big deposit, down payment, you don't really need the SBA program. So most people that are going to the SBA are going there for the increased leverage, right? You're getting a higher loan to cost or loan to value, and so that would be most likely make it a good SBA potential deal. So really, what's the loan to value? Is there other banks or conventional loans that would make more sense? So that's what we first look at. So like, are you trying, if you're doing a business acquisition, for example, and there's no real estate, you're not going to get a very, and it's, you're acquiring this business, let's say, with no real estate. So it's all blue sky. Most conventional programs would be very, very low leverage. Okay. So you're talking about probably 50% loan to value versus the SBA 7A can get 90% loan to cost. Plus you can build in working capital and stuff. So the banks are incentivized because a portion of the SBA loan that they make is being guaranteed by the federal government. So that's why they make these loans, and then they have the credit elsewhere. If you can get a loan somewhere else, it's usually not a good SBA fit. So it's really comes down to loan to cost, the acquisition of a business. Most banks don't want to lend on just a acquisition where there's no collateral. And the SBA and their guidelines allow for that to happen. So that's like the main big reason why you'd want to go SBA. A conventional loan, if you're, let's just say you're buying a building or you're buying a business that's got real estate and you've got a large down payment, you're bringing enough equity into the deal, then potentially sometimes a conventional loan makes more sense. A little bit, sometimes less costs, such as the SBA guarantee fee and so forth. So that's why you might want to do a conventional loan. And also the SBA 7A loan is oftentimes a variable rate based on Wall Street Journal Prime plus your margin, right? So the rate is right now isn't that attractive. So sometimes somebody would say, well, I'd rather go conventional and pay less and put more equity in the deal. But most often, most business professionals are trying to leverage as much as they can, and that's why SBA is usually the best option. Of course, it's a full document loan. You got to provide tax returns. Usually, you have to be a U.S. citizen. You can't have more than $5 million of SBA proceeds. So that's the reasons why you might want to go conventional. But all in all, usually the SBA would be the first way we look. Now, if you haven't prepared your tax returns, that's when you might want to do some kind of private money loan if you're a year behind on your taxes or something like that. But full doc loan, it's the best program you can get right now. Hi, if you'd like to book a call with me and discuss SBA financing, whether it's a 7A or 504, or you just don't know where to start, maybe it's a startup business, you're buying an existing business, you're buying a franchise, you're building a new office building, you want to expand your existing business, we have multiple solutions. I can walk you through the 7A and the 504 and the SBA loan process. And if you have any other questions on any other types of financing, I'm happy to book a call with you. The link's below. Look forward to seeing you soon. Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.